Welcome to Richard Suttmeyer's 4 in 4. 4 blips on my radar screen presented in 4 minutes or less. My first blip previews what to look at when the FDIC releases its quarterly banking profile next Tuesday. The quarterly banking profile for Q2 will highlight many troubling issues, including 5 categories of loans. I have been tracking construction and development loans for my audience since April 2006. FDIC Chair Sheila Bair at a recent FDIC conference said that the list of problem banks now exceeds 90, the number published for the Q1 2008 quarterly banking profile. $45 billion of the $632 billion of C&D loans were delinquent at the end of the first quarter. My second blip looks at Fannie Mae and Freddie Mac. A year ago, at $70 a share, Fannie Mae was viewed as a potential savior of the mortgage market and hence the housing market. Today we question the company's survival at $6 a share. On May 7th, the stock was around $30, and then I called for nationalization of Fannie and Freddie. My third blip explains why the housing bill will not work. The bill is an attempt to bail out borrowers, but only those who qualify for mortgages and have mortgages that were originated between January 2005 and June 2007. These mortgages should have never been originated in the first place. It's ludicrous to exclude homeowners facing default and foreclosures on mortgages originated outside this particular window. Of the $12 trillion in mortgages outstanding, only $2.215 trillion are on the books of community and regional banks using the old-fashioned originate-to-portfolio mortgage model. Banks who just service mortgages cannot help refinance under this bill because they don't hold the mortgages on their books. They simply collect the servicing fee, usually 50 basis points. They pass the principal and interest payments through the conduit that corresponds to a particular loan security. The housing bill raises the national debt ceiling to $10.6 trillion, an increase of $800 billion, which does not cover the total U.S. debt that now rests on the U.S. balance sheet. There is roughly a $1.1 trillion cushion between the new limit and the existing federal debt of $9.5 trillion. But Fannie and Freddie have debt and mortgage portfolios of $5.2 trillion. Thus, the U.S. is above the debt limit. In my judgment, this makes the housing bill unconstitutional. The housing bill is supposed to become law on October 1st, but HUD may not have the loan standards prepared for up to $300 billion in guarantees until mid-2009. My fourth blip describes originate to portfolio versus originate to investment. Originate to portfolio puts the mortgage on the books of the bank. This is only $2.2 trillion of the $12 trillion mortgage market. Originate to investment takes mortgages and puts them into securities and sells them to investors. This was designed to spread the risk during tough times like we're having today. The housing bill helps investors and increases the cost of borrowers and lenders, which is just plain stupid. If you have any comments or questions, shoot me an email to gmcreports@aol.com. That's today's 4 in 4. Enjoy your day.